Welcome back to the Independent Investor Channel. My name is Ryan. I get asked all the time, how much stock should I buy? How much cash should I have? Should I have bond exposure in my portfolio? And really all these questions are coming from a very genuine place. And if you're new to investing, this can be really overwhelming to the point where you don't actually invest in the stock market. It becomes so overwhelming that you don't even start, because a lot of people can't really seek out or get really good explanations as to how to break down their specific risk tolerance to the stock market. And unfortunately, when you first start investing, you really don't have those validations. You don't have that experience in the stock market to have evolved to a place where you can really look yourself in the mirror and say, wow, I've really got my level of exposure correct. And when I'm talking to people about thinking about entering the stock market, it's sometimes interesting to take a step back and imagine yourself around a campfire, right? And the campfire itself represents the stock market. And the idea is to get close enough to where you keep yourself warm. You're not too far away from the fire to get cold, right? There's that happy medium, right? Now the fire grows in intensity as you put wood on it. That's indicative of a strong stock market. And it dies down as you stop to add fuel to it. And you always have to kind of adjust, you know, how much distance that you have between yourself and the stock market to make sure that you don't get burned. And I think that's a lot of the fundamental piece that I'm really interested as to why I'm really seemingly the only one that wants to dive into the trenches with regard to answering these difficult questions for people. And they're not really difficult for me at all to explain to folks. And that's really what a lot of people need, is understanding what your risk tolerance to the stock market is. And you think, well, okay, you know, how much is this going to cost me, Ryan? And a lot of what this fundamental building in the stock market is, a lot of these approaches that I talk about are free of charge. They won't cost you any money at all. You just have to kind of have some willingness to humble yourself a little bit and run yourself through the exercise to kind of get an idea of where you are in your own risk tolerance. Now, me personally, I come out with a scale of 1 to 10. All right, I break down kind of the same way that I'm going to talk about tonight on this particular episode, talking specifically about risk tolerance and thinking about kind of a spectrum of going from a conservative investor to an aggressive investor, and all the definitions along the line, and how you can adjust your portfolio to meet those needs, to make sure that you're staying warm by the fire, but you're not too far away from the fire, right, to get cold, right? You want to make sure that you're maximizing, you know, your opportunity in the stock market, and also to make sure that you don't get burned and that you're overexposed to the stock market, right? So when we talk about being a conservative investor, all right, if you're one of those folks, and I've left a questionnaire on the Facebook group. It's one of those really good questionnaires. I've had a chance to go on and do it myself. It was a really, really good exercise. I encourage you guys to go on there and utilize the tool, again, free of charge. The only thing you're going to get out of it is an education, maybe fine-tune your own risk tolerance to the stock market and understand maybe what category of an investor that you're in, and that'll kind of help you understand whether or not you want to be a little bit more weighted toward bonds or a little bit more weighted toward stock. Now, the one thing that this doesn't account for in this portfolio allocation, what it will tell you is the percentage of bonds, stock, and cash in your respective portfolios, okay? What it won't tell you is whether or not, you know, you're going to fill that stock piece with passive ETFs to meet your growth and income, or meet your value stock piece of the portfolio. And in this asset allocator tool that I actually have on my investing platform, which I have every intention of going in here and actually running you guys through this exercise. Why? Because it's extremely important for you guys to understand what's recommended under the stock umbrella. You know, what percentage of your portfolio should be devoted to a value play or a growth play or a small cap play. And we've already talked about some of the products that can go in there in line of good dividend payers. And of course, there's a lot of the ETFs that I've mentioned throughout the catalog of the videos. But there are specific ETFs and index funds that can meet certain niche portions of this portfolio. And the Allocator tool will let you know exactly what you need to do to adjust your portfolio. For example, in mine, it tells me that I need to decrease in certain categories, and it tells me that I need to increase in other categories. For example, I'm extremely deficient in my international holdings, right? So it's a really cool tool for you guys to go in there, throw your accounts in here, and really get a good benchmark on where you are in your portfolio holdings. And this is what I consider to be in the trenches. When you guys are sitting back and you watch my catalog of videos, you pick up a little piece here and a little piece here and a little piece here of education, right? This is just another ace in up your sleeve, right? So you can take and understand, hey, Ryan talked about risk tolerance to the stock market. What's mine? And you guys should be able to answer whether or not you're a conservative investor or an aggressive investor or somewhere in between, all right? Now, a portfolio for a conservative investor is going to be really interesting, and I've broken this down in a really simple way to remember, in that if you're a conservative investor, the recommended allocation for you guys is actually 60% in bonds, right? And then we kind of look to fill the rest of the portfolio up with your stock and your cash allocation, okay? But as a conservative investor, we're looking at actually over 50% of that portfolio in bond exposure. And I'm going to come out with videos talking about the products that I use to fill my particular bond pillar of my portfolio. But the rule is very simple. It runs as a conservative investor, 60% in bonds, 40% as a moderate investor, and 20% in bonds as an aggressive investor. And that's where I am. And right now I've got about 10% exposure to bonds. I've left the additional 10% to build up over time, all right? So that's the bond section of the portfolio. So if you sit there and say, Ryan, I think I'm a moderate investor, the recommended benchmark is around 40% of a portfolio, adjusted either way, a little less, a little bit more, right? These are not hard and fast rules. But it's really interesting to be honest with yourself. If you adjusted and said, well, 40% in the bond exposure it seems like a little bit more than I want in bonds, you can adjust it and say, look, I'm more of a moderate aggressive investor, and therefore that bond exposure will reduce down a little bit. Okay, so that's kind of how you have to think about the 60-40-20 rule. It's very simple to think about it in those terms. And as we kind of move down and we talk about what the recommendation is for a conservative investor on the stock side of the house, it goes the opposite way. It goes 20, 40, 60, right? So as a conservative investor, they're talking about 20% of your portfolio, right, to be devoted to the stocks. And then as a moderate investor, you should have 40%, give and take a little bit. And then as an aggressive investor, we're talking about, close to 80%, depending on where your other allocations sit. And that's about where I am, is about 80% devoted to stock, all right? Now, the final pillar of this portfolio breakdown along the conservative to aggressive spectrum is the amount of cash that's recommended to be had on hand. And get this, guys, this is really cool. As a conservative investor, the recommended amount of cash on hand is 20% of your total overall. So for example, if you had $10,000 to invest, they're recommending that if you're a conservative investor, to have at minimum $2,000 in a cash holding not exposed to the market. Remember, not too close to the fire, right? And these benchmarks really can help you. And you may say that you're a conservative investor, and you may look at how the performance of that portfolio goes over time, and you can handle it with no problem. These can evolve and change over time, in that you could go from a conservative investor to an aggressive investor over time. Now, as a moderate investor to an aggressive investor, those cash amounts fall off the table, and it actually falls all the way close to almost 0%. It's 2% cash on the sideline, as they would encourage everyone who's more of a moderate to an aggressive investor to have most of their money working for them in that tax-deferred account that I talk about all the time, the self-directed Roth IRA account. So I really hope you guys enjoyed this explanation of talking about the three aspects of portfolio allocation and how you can use those allocations to reflect your own risk tolerance. Risk tolerance is one of those things that is breezed over all the time, and it is one of those topics that absolutely warrant discussion. You have to be able to define your risk tolerance to the stock market. Otherwise, you're going to end up getting burned, and it's going to turn you off of the stock market. I see this all the time where people are overexposed. You know, they stand too close to the fire, they end up getting burned, and they end up exiting the stock market never to invest again. And that's not what we are trying to do. I would encourage you guys to start more even on the conservative side and ease that risk tolerance, evolve that risk tolerance over time, and make sure that you're defining it to be as accurate as it possibly can be to really reflect what it is your risk tolerance is. Guys, if this is your first time tuning into the Independent Investor channel, I would ask for your subscription. Hit the subscribe button, hit the like button at the bottom to support the message. Leave your comments at the bottom of the video and share this message out there with anybody who's confused on investing and really just needs an explanation on one of the key fundamental pillars to building wealth in the stock market, and that is answering the question of what is my risk tolerance to the stock market. Again, thank you guys for tuning in, and good luck in your investment future.